Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Go back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is, well, CPI today, which is the big number that's everybody's looking at. I go through the charts, but like it doesn't matter. Only thing that matters is CPI in my mind. All right, E-mini yesterday was incredibly volatile, and I mean incredibly volatile, all over the place. Big gap down, pretty big move at the bottom. There was a reversal we watched. It was pretty close to the end of our session. I wouldn't call it by the dip though. Like 41.50, they were hard capped, and now in the overnight session, some panic in Japan as the Japanese bank did not buy ETFs like they were expected to, and it's just a big mess overnight. Treasuries pushing down yesterday as well. Pretty mild this morning though. Oil taking off, supply constraints over there. Pipeline being down and everything. Gold and silver just kind of holding their levels up here. That's nice. Copper taking a little bit of a dive here this morning ahead of the CPI, which is curious. And the dollar, again, getting hit yesterday, and then overnight it kind of recovers. And we'll see. Like, here's the thing. Here's the thing with the CPI. The estimated number, core inflation rate, month over month for April. Well, just not even, let's ignore the core. Just the inflation rate month over month is expected to be spot 2. Previously was spot 6. I have a really hard time believing that it is going to be spot 2, but that is what the estimate is. And how many times in a row now have we been looking for this inflation, and then that number comes out and you don't see it in the CPI, right? And then we get to go through this whole conversation again about how housing inflation is the biggest component in that, and they're using rents, which haven't been allowed to go up, and there's a court case about it, that all this other stuff. Whew, it's going to be interesting. So I have to apologize. I'm not myself today. I am in a fog. So yesterday on Twitter, Daniel Moss, copper absolutely tearing towards the implied measured move of the more technical analysis. Everybody's always got to share the technical. So Goldman Sachs had a price target that said that within 4 years they could reach $1,500 a ton. But they're already at $1,150, $1,200. So copper's already starting to outperform some of the most bullish analyst expectations. Okay, so I have a question because you dismissed technical analysis. What is your opinion on XE Futures and SMB Capital, who both use technical analysis not exclusively, but together with order flow? So the question is always, what kind of empirical evidence do you have? Okay, so when we talk about, first of all, a lot of it really depends on what your definition of technical analysis is, right? Because I think that a lot of the real technical analysis purists, that's probably not the correct word, but enthusiasts would say that what all of these quant funds are doing is technical analysis. I would disagree, but okay. Now, can you find, based on market data alone, past market data alone, can you find patterns that would identify market inefficiencies that you can exploit? Yes, but it will not be popular one. Okay. If there's something super popular, for instance, Axia guys often use channels as Eric guy uses Fibonacci. Well, so here's the thing is that, yeah, so I think the larger question is this, okay? So if we say Fibonacci's don't work, or at least the way that they are popularly thought of, they're useless, okay? Because any kind of edge that was in it is already taken out of the market, okay? Or it just flat out doesn't work, which I think is probably the case with things like Fibonacci's, okay? But then you're going to go and you're still going to find somebody that it has been successful with it. So like Kevin, you're mentioning, some people from Axia. Well, first of all, I don't have performance data from anybody from Axia, so that's a first problem. So we can't really analyze that, right? But the second thing is that I believe that for a lot of proprietary trading, that the edge does not have anything to do with anything predictive at all. That the edge that they have, it has much more to do with how they manage risk, particularly if you're trading equity indexes, right? So over the past couple of years, you just got to put risk on and you're fine. And you're fine, but you make money. So like the whole thing is you take on risk and then manage the fat. Well, there's two ways of doing it. One is you take these small trades that win most of the time, and then you have to be able to manage or survive the fat tails, right? The other way of going about it is you take something that has a little bit more variation in it, but ultimately, if you're taking risk correctly, then when you're on the right trade, you can make way more money than you lose, right? That's the intention. So the issue that you'll see is like if I come in and I do a back test on Fibonacci's like that. Even if I come in and I say if there's Fibonacci and there's absorption order flow in a certain location, I might be able to prove that if there is an edge that it's super, super tiny. It's like 2%, right? But there's a larger discretionary input into it that allows them to make tons of money when they're actually right? Everything works in trading, but most don't know when what works. I don't know. So like these quant traders, as I understand, like the Jim Simmons of the world, have patterns of sorts that they're looking at, but they also have really sophisticated machine learning models that break the market up into different kinds of regimes and treats it differently based on the regime that it's in. So it's way more sophisticated than I think most retail traders even begin to try doing, right? But to the larger point, if the edge is in how you take on risk, you don't really have to look at the technicals at all. You just have to know the news and the situation to be able to judge when it's a favorable risk-reward situation and trade it that way. Get what I mean? Or to put it more simply, a lot of successful traders have no clue why they're successful. Okay, we got 30 seconds here. I'm going to have to pull up. Kind of thinking about yellowing long in here because I think that the number is going to come out. It's going to be just fine. Ooh. Holy shit. Spot 8. Spot 8 versus spot 2. The market is just losing it. So I came over here into the micros and tried clicking market sell, and it didn't do it. Oh, mama. I need to disable that. Hold on a second. Of course. No, we're still not. Well, hold on. Well, folks, I think it's safe to say that my machine is not capable of handling a volume event of that magnitude. Oh, man. Oh, you know what? I might have taken some trades in MES and it just, like, filled them immediately. That might be what's going on here. That might be what happened. Oh, man. Oh, my gosh. The treasuries are coming back on this hard. The dollar is spiking on this news. Interesting. And gold and silver taking a little bit of a dive. So here around 15, I think is fine to be, for me to be taking them. What a move. 21K volume minute candle. Man, so again, the inflation rate was spot 8. The core inflation rate was spot 9. And the rate year over year was 4 spot 2. Yeah, that's pretty cray. Oh, I turned that off. Why are you still making that noise, my friend? Oh, because I didn't get rid of both of them. Okay. Okay. So I was able to work something out in the treasury. I don't know if it was wise, but Mm-mm-mm. So log of the treasury. Pushing down. The E-mini, it appears, is stuck because it's not getting the volume. So it's doing it a little bit at 14, but then at 13, it's like, eh. So this is over here is not moving because the order book is just destroyed. This is the largest CPI print since September. I think I need a more clickbaity headline. What is the most clickbaity headline I could possibly put on here? Inflation is here, panic. Inflation is here, markets panic. So we are seeing somebody trying to buy up the E-mini here. In fact, cumulative delta is now higher than before the news. Hoard gas, not toilet paper. I don't know if gas is necessarily the thing. Well, let's come through the commodities and look. So I don't see a reaction in soybeans or corn that's too dramatic. It's up, but not like corn is moving up. So corn is moving up, but they're not like anywhere close to like extreme yet. Copper is moving up, but copper had a big sell off this morning, so there's on that side. The 6J. So really was more in the currencies. So at the moment, it appears to me that the currencies reacted excessively, but the commodities have not really moved yet. All the financial instruments. So they took out the day low stops and bought it all back. Yeah, like exactly. So now I need to come back here and look. Did it take any E-mini trades? It did. That's exactly what happened. Is it took some trades and they immediately closed out. But the damage wasn't too bad. Look at GC. Yeah, gold is getting hammered. It's coming back up. It's come back up to, well, silver. Let's see here. Yeah, both of them. Silver has come back to about the news price. So we may as of yet see silver like take off, but one time this dip down bounce, probably not. So my reading of the flow at the moment is that the reason they did not move down further in the E-mini is because the book couldn't handle it. Like, there's not enough liquidity out there for it to move away from the 50% retracement, right? So basically, we went down 40 points, and now we have come back up 20, essentially. We came back 50%, and now probably there is some profit taking. Probably there are some people that were trying to get short that are getting stuck. And there's probably a lot of people that are, like myself, that are trying to short this and are just getting hammered. But it's not stuck in there because the market participants don't think that it could go lower. It's more of a function of the order book. Is the Dow super? Oh, so you don't have my thing up here. Well, I see YM is only down 0.27%. Pretty big divergence. I mean, the NASDAQ definitely. Look at that. NASDAQ and RTY taking it the hardest. Yeah. That would make sense. Like, the thing is for stocks. Hold on. Okay, I need to go check this out. Hold on just a second. The issue for stocks is that the impact of this particular piece of news on individual issues is going to vary. Is going to be very dramatically from issue to issue. For a lot of companies, like if you're Freeport McMoran, this is good for you, right? For banks, it could be good. It's kind of good and bad for banks, right? But for banks, if the Federal Reserve increases rates and well, the spread flattens. Yeah, I'm getting this, like the spread on the 30-year flattened and the spread on the 2 and 10s steepened. So that's not necessarily good for banks. But a higher rate overall would be good for banks, right? So yeah, look at this thing. It is going to try and make it all the way back, huh? Okay, so anyways, let's go to the Fed tool. Yeah, the dollar up. Well, the dollar being up as hard as it is not necessarily good for the E-mini, but it's like 50 points, so it's like, it's okay. My two positions here are offsetting each other at the moment, so I'm okay dealing with it in this way. So I'm kind of hedged, but I do want that E-mini to stop moving up. Let's see. No, tools. I want tools. Tools. Fed watch. Okay, so of course June's still 91%. November. Huh. Okay, well, if it's changed, the Fed Watch tool rather is not reading it, so. Should come back over to here. Let's see here. U.S. money markets are now pricing in 100% probability of a 25 basis point rate increase by December 2022 versus an 88% versus the CPI data. I don't know, man. With the way that this is going, you're going to have to increase it a lot sooner than that, right? Rory Cooper, the idea that she's actually being tossed because she's a distraction or not focused on Biden is bunk. I'm able to confront liberalism with conservative every day while also telling the truth about January 6th. It's not hard. Voters can handle it. No, Rory, you're dead. You're dead wrong. Liz Cheney is basically preventing the GOP from having any kind of messaging because she keeps making comments about the January 6th thing when she doesn't need to. It's like it's done and it's over with. Stop talking about it. It's not to your political advantage to talk about it. I don't know why that's so hard for some people. All right. This thing with Liz Cheney that's going on. I know that's seems like that's so far off from what we're talking about in CPI, but I do believe that that is a situation that we should monitor. Yeah, that doesn't make any sense at all. Trying to hold your risk reward is wrong. Trying to set your risk reward will be hard. Like, this is exactly the kind of situation that we're talking about. Is like, off of a move like this, I'm going short. So I'm going short in the E-mini. And I was like super late. If it had sold when I wanted it to, and I had things set up correctly, man, there's no way to do it, because even if I had set really wide targets and everything, it was just too fast for me to take. Okay. But let's say that maybe I had a faster processor or something like that, and I was able to manage the risk somehow. You take it short. You could be totally right that it's going to go lower, that it's going to go to 40.50, for instance, and the market could just move temporarily against you, just off of freak volatility, right? Oh, zero hedge. That's so good point. Oh, jeez. There's a 10-year auction today. Oh my gosh. The 10-year auction is going to tail so hard. Oh, man. That's gonna be interesting to see what the treasuries do from here because of that. Oh, I don't know, man. Like, especially when we come back and we look at how far we've come back from the lows of the year. Even in the past week, there is plenty of room for the E-mini to continue tumbling down. Yeah, Contract volume is big, which is fun. Yeah. But I mean, I'm doing this with sim orders. There's no way that I would be able to take on the risks in this situation unless it would have to have been like, if I was really going to trade, I should have tried it. I should have just tried placing a bet in the micros, in the micro ES, with a really big set stop and target, right? Because if we had just taken it short going into the news, you know, probably would have gone and taken your target, right? Or you could have, you guess you don't even necessarily have to have a target out. You just have a good stop set. Just have a good stop set, like a 10-point stop. Yeah? Like we're willing to risk $100 on it. We could have done that. 5-year break-evens, 2.81 highest since March 2005. Another 10 basis points, and it gets quote-unquote awkward. Oh, are cryptos moving too? No, I'm not seeing that. What is... am I on the wrong contract now? Hold on. Zero Hedge says Treasury's up on crypto hedge, or sorry, on inflation hedge. I don't see it. I'm not seeing that at all. Like, I see Bitcoin is up 2.3%. It's not, no. Yeah, I'm not seeing that. Not even on this chart. Wishful thinking much? It hasn't moved at all. Maybe, well, okay, hold on. What about Ethereum? What about Ethereum? Oops. I don't want your crypto desktop. I really hate it when desktop application is just like the same as the web application, you know? This is wishful thinking. But pump harder. ETH is the one you need to watch, says Anthony. Probably. By the way, welcome. Haven't seen you in a few weeks. Yeah, it hasn't really moved yet though. Pump harder. Pump harder. Okay, well, the ES does appear to be coming down a little bit now. It's still... it's pretty slow at the moment. So I'm going, because now I'm just realizing Fed's Clarida speaks at the top of the hour. Blistering CPI. Ooh, it's hot. Good descriptive keyword. DeFi. Well, so this is going to be an interesting thing because for cryptocurrency, I do not believe that from a fundamental perspective that Bitcoin is really the best hedge against inflation here, because there's some big risks, right? Mostly, I would say it's because there's some big risks, but people seem to believe that it is, and since the large majority of activity in Bitcoin is speculation, it would not be surprising if we saw cryptocurrencies start to move. They did not trade it off of this news, right? Oh man, I'm showing the wrong thing. Yeah, my strategies are all taken off too. I have to go fix that later. So yeah, but here it is. It's like they're not the financial professionals, the traders. They're not trading Bitcoin right now. Like, why would you? No, it wouldn't make any sense, right? Why wouldn't you just trade the Treasury? Like, the Treasury is the most pure play on this. So I'm really happy that I was able to work something out in the Treasury. I sold it. I clicked sell in the Treasury first, and I forgot that I still had my super close target on. So I had one that didn't work and one that did work, which is kind of really more just random chance, If I had done it correctly, I would have gotten 07 half. So I got 10. Oh, I actually because of all of that, I actually got a better price. Oh, that's funny. Because of that nonsense, I actually got a better price than that me clicking market sells. So BTC has its dominance sinking versus yes, noticed that. Well, so like if we come over to CoinMarketCap over here, we'll just come and look at my watch list here. No, I don't care about your portfolio tracker nonsense. Okay. So Ethereum is up 8%. EOS is still showing the huge pump from yesterday was pretty crazy. Garlic Coin hasn't really moved a whole lot. Most of the other coins are kind of sitting there. So the situation doesn't look much changed from yesterday. Even the Dogecoin still below 50 cents. So, well, like I said, I think all the financial professionals, you want to trade the 10-year. Like, look at how this worked out for me in this situation, right? Like on the 10-year, it looks beautiful, and in the E-mini, it's still struggling and being a little bit frustrating, right? There's so much more liquidity and volume, to work with in the Treasury, and it's a much more pure play on the inflation anyways. This is the place to take the trade in the 10-year, right? Remember, I keep saying, like, Treasuries have really sucked for us doing market making lately, but it is a really important tool to have in your repertoire nonetheless, because you're going to get into those situations like now where markets get really volatile, and you're going to want that liquidity from the 10-year, even for you teeny tiny little guy with the one contract, right? Look at 60. Yeah. So the dollar is took a huge jump on the news and is now falling apart. I would expect in this situation the dollar to be lower in the end, right? Your dollars are becoming worth less. The dollar index should move down, right? But one of the issues is that this is probably not just a problem for the United States, right? This is a worldwide problem for one thing. Woofy. Is this another coin? Oh man. Vlad says I'm scared. Oh man. Wait, what? Wait, what did Clarita say? What? So what I'm getting from Clarita at the moment sounds like he doesn't know what the print was. It sounds like he doesn't know what the print was, but I wouldn't take that. I'm not listening to the speech. I'm just listening to this news squawk repeat some of the headlines from the speech, and they're like, it will take some time to make significant process. We're still going to be buying treasuries and yada yada yada. It's like, okay. Man, then just look at the treasuries. Just continue plowing. Continue plowing down. Has the spread? Yeah, okay. So the spread between the 30 and the 10 is reverting a little bit. Just a little bit. The steepening in the 2s and 10s has gotten steeper. I don't know, Anthony. It sounds like a Ponzi. I am still like, okay, look, again, our ability to predict things is really limited, right? So if it's all about, managing the risk of things, I don't want to be in cryptocurrencies that are like, going bonkers or anything like that. Or seem like, if somebody comes in and they're like the Sure Moon, this sounds like the Sure Moon scheme. It's like there's no way you can lose on this sort of a thing. Like that to me is like, if it doesn't gonna work, you can lose everything. So who does trade the E-mini before the open and who starts trading it after the open? Talking about big players, because like today, you get some pretty decent volume before the open. I don't have any empirical data to tell me exactly who trades when or anything of that sort. But perhaps if we went and we found, perhaps there is a CME video similar to the trainings that they've been doing in treasuries. They would probably talk about that sort of a thing. But I'm going to guess that the majority of the big players are hedge funds hedging their plays in the S&P 500. So they don't want to sell their stocks. They come in and they sell the futures because there's not enough liquidity in the pre-market to actually sell their stocks. So they sell the futures, for instance. All right. I think that speculators, a lot of it really is us. I'm scared. I don't know if we have to be scared. So we're still in line with what I've been saying, at least, right? What have I been saying? Well, I don't know if the inflation is really transitory or not. I'm a little surprised that the Federal Reserve seems to think that they know that it will be transitory. All I know is that at least initially, the inflation is going to be much higher than people expect. And that is definitely what we're seeing, is this initial inflation that we're coming is a lot higher than people expect. There's been stuff going on where basically the inflation, it's there, you can see it, but it's kind of been hidden from us, and then all of a sudden it just boom, right smack in the face. Okay, so let's come and actually look at the report itself. How about that? That might be a smart thing to do. Consumer Price Index for all urban consumers increased 8% in April on a seasonally adjusted basis after rising 6% in March, the U.S. Bureau of Labor Statistics reported today. Blah, 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 blah. The All Items Index increased 4.2% before seasonal adjustment. This is the largest 12-month increase since a 4.9% increase for the period ending September 2008. Okay, so first thing that we should remember is that we have had a year-over-year increase of this size within our memory back in 2008, the last financial crisis. So having a big CPI print immediately after a financial crisis is not necessarily crazy. Okay. The index for used cars and trucks rose 10% in April. This was the largest one-month increase since the series began in 1953, and it accounted for over a third of the seasonally adjusted all items increase. The food index increased in April, rising 4%, as the indexes for food at home and food away from home both increased. The energy index decreased slightly as a decline in the index for gasoline in April more than offset increases in the indexes for electricity and natural gas. Okay, that's a problem. That is a problem because, the energy index is going to be higher next month. Okay, the index for all items, less food and energy, rose 9% in April, its largest monthly increase since April of 1982. Nearly all major component indexes increased in April, along with the index for used cars and trucks. The indexes for shelter, airfares, recreation, motor vehicle insurance, and household furnishings and operations were among the indexes with a large impact on the overall increase. I want to see. So over here, food at home, spot 4, food away from home, spot 4, energy. Used cars and trucks had significant inflation. Okay, apparel, spot 3. Medical care commodities, spot 6. That's very interesting. Shelter, spot 4. So we're still not seeing the significant increase in shelter, which, remember, is like heavily weighted. Transportation service. Oh, that's so the actual, when you dive into the numbers, it actually gets more interesting. It actually gets more interesting because now I'm just like, oh, well, what's it going to be like next, what's it going to be like next report? Oh my gosh. I'm not going to show you guys this picture, but somebody on Twitter posted this picture with a guy and a girl making out, and the girl asks, "What's your favorite position?" And the guy says, "Probably long term futures at the moment." Fled's Clarida expect inflation to return to or perhaps run somewhat above 2% in 2022 and 2023. Okay. Treasury's still selling, man. Anyways, I expect, though, when the stocks open, you're still going to see some crazy movement, right? Because there's going to be all sorts of readjustments that are going to have to be made in the individual issues. So Liz Cheney's talking on the House to the Republican conference right now. We cannot let the former president drag us backward and make us complicit in his efforts to unravel our democracy down that path lies our no. Sorry, but allowing people to like audit the election results and investigate what happened to ensure that the election was done correctly should only strengthen democracy, should only strengthen our democratic systems by increasing trust in the system by proving that it was done correctly. Should only be concerned about people looking into something like that if you think that they're going to find something or they're going to come up with some sort of an excuse. That sort of thing is healthy. Floods Clarida. I see risks on both sides of the baseline economic outlook. Okay, so one thing I am noting here is that the E-mini went up to the ATR stop, to my ATR stop line, and then it turned, which I see all the time. I don't know how to predict it. Like anytime that this one's so weird. Anytime that I try to go in and like test this thing, it doesn't work. Like it doesn't. I'm not able to find any kind of statistical evidence to show that it works. But man, I swear I see them go up to that ATR stop line and then turn back around so often. Man, okay, it's time to reset things. Oh yeah, we don't need that. Oh, we don't need that either. $35 watching now. Please take a wait here. I'll have the thing read it out.
Winston's mom says 35 watching now. Please take a quick second to hit the like button. This helps the channel numbers. It's also lucky. Like a virtual rabbit foot lucky penny charm. Thanks.
You have been visited by MoneyStream. Click like button now and you will receive financial fortune, but only if you do it in the next 5 seconds. 5.
Block cell.
4. 3. 2. 1. Oh, well, I guess some of you guys missed out on like maybe it will come back again later.
Winston's mom says, and of course, I am kidding. Speculators makes no claims that a rabbit foot is lucky. I do not know how he feels about the 4-leaf clover.
I think I found like the first time that I ever looked for clovers, I found a 4-leaf clover, and then since then I've never been able to find one. But here's the thing. Being superstitious is bad luck, guys. Okay? Being superstitious is bad luck, so please don't do it on my stream.
Block by. Block by.
Okay, so some significant buying right there in the treasury. When do you think Jay Powell's hair is on fire? When CPI hits 9% in June or July? Oh man, it's such a, I mean, It's such a good question, Aether, right? Like, I'm just listening on the news squawk to Clarida, and again, I'm does he not know that the print was spot 8? It's important that pressures to be inflation be transitory. If not, we will use our tools. So like, oh man, this is such a problem. And he's talking about the April jobs report. Because the issue here is that the Federal Reserve insists that it's transitory. Like, they're basically saying you're going to get really hot CPI prints here in May, June, July, August, maybe. And that by quarter 4 of this year, that those forces will have subsided, right? So the issue that I see, or I think the issue that people are concerned about, is that if it is not transitory, that by the time the Federal Reserve acknowledges that it is transitory, it will be way too late. And I tend to agree. I think that this inflation could do a lot of damage to the markets. Now, the flip side of that is that the markets are up so high already that, like, maybe that's just bringing things back into line with where they should be, and it's not a huge deal. But man, I don't know. It sure is interesting times, right? Like, we thought some of the stuff that happened before all this, like when the repo market fell apart and that big tantrum that they had in end of 2018 and all that stuff, like, that was really interesting times, and all the QE era was really. But what we're seeing here right now this year, this is going to be the stuff that the financial historians and scholars and stuff are going to focus on, right? How do you tell? How do you tell if inflation is transitory? What do you do with your policy when you have a big market crash and you need to support financial markets, but you're getting inflation? A look back at the policies from the 70s, but slightly different. Uzi says you can't tell you use it as a curtain to shield your party from criticism. Average consumer reads inflation and thinks stocks go up. Well, but I mean, you're not wrong, right? Some stocks really benefit from inflation. Some stocks don't. And there's kind of two deciding factors on that, right? So if you are a material producer, then it's really good for you, right? If you're a material producer, so like Freeport-McMoRan is the one that I'd be buying right now. Maybe I should be pulling that up and just going and buying Freeport-McMoRan today. I don't know. I'm actually thinking, though, let the markets freak out and come back, and then I still got my money loaded up, I'm still ready to buy some more stuff. By the way, gold and silver took a big spike up, but then again came back to where they are now. The dollar oscillating back and forth quite a bit. We're just, things are still sorting it out. I feel like CPI has been a joke in trading, so yeah, you know what? Well, the issue is this either. They're kind of saying that inflation doesn't matter, They're kind of saying that unless the inflation impacts the average American, that it doesn't matter. That's basically what they've been saying. And that's basically what CPI says. CPI is basically set up so that it's only showing us when average Americans are impacted by it. Well, average Americans are impacted by it now. Are they going to continue to be impacted by it into Q4 of this year? Boom,
Block
boom,
sell.
boom. Well, we'll see. My oh my, block sell. After those two big buys earlier at
Block buy.
04 and 04.5, for them to be piling down, and look, it's not like there's not buyers here in the Treasury, that they're just getting buried. Okay, Cheney has been ousted. House GOP held a voice vote with no recorded totals in ousting Liz Cheney. Some members are recording their votes in other ways. Lindsey couldn't. I was proud to vote again. I see. They're posting on Twitter to make sure that everybody knows I voted to get her out. Yes. Okay. People have been screaming at the Fed, myself included, that the CPI calculation is horribly flawed because it took this long to cut this weekly. Now on that one, I don't agree with you either, to be honest. So the problem with that take, I think, is that the Federal Reserve doesn't just look at CPI, right? In fact, from my understanding, CPI is not even the biggest component that they look at. I mean, they're really digging into the data, and they're looking at every piece of data that is available to them. So in this instance, I don't think that the Federal Reserve is clueless because the CPI data is flawed and they're relying on the CPI print, and therefore they're getting a misreading. It really comes down to they're looking down into the numbers, and they strongly believe that the things that are pushing the prices up, the inflation up, are all things that are going to go away before the end of the year. And it's not like they have a bad argument either. Okay, I think that's actually a really solid argument. In fact, I dare say, I think that what they think is going to happen will happen, but they'll still be wrong. How will that be? So what will happen is we are getting these supply disruptions, and that is increasing prices. And those supply chain disruptions are going to subside, and so those components will not continue to contribute to inflation. But what's going to happen, and where they're going to be wrong, is that the hot CPI prints that we're going to get here at the beginning of the summer, that are all above people's expectations, are going to lead to reflexivity, right? Which means that people, particularly the average Joe, is going to look at this data and is going to start making financial decisions based off of it, right? And those financial decisions feed back into the data. So the things that are causing the inflation right now will subside and be replaced by other things, namely people being stupid, right? Somebody tried buying it up there in the E-mini, and they're burying him now. They're burying him now. 5 minutes to the open. There is pretty good support at the, let's say, 41.11. It's really more like 41.12, but never let a good crisis go to waste. I don't know. I mean, the issue is, this channel has become a way station of low-hanging strategies. I don't share my strategies with you, Icarus, so I don't know how you can say that. I mean, I have positions on the positions that you're looking at in front of you have made $500. So I don't know what you're talking about. Anyways, what if? Okay, what if the pandemic didn't happen? Let's kind of take it back. Let's try and isolate the political thing. So let's say that the pandemic didn't happen, but Joe Biden is still president. Okay, because then we don't have to deal with like the China trade war. You know what would be happening with the China trade war and everything else like that. Okay, what would be happening right now? Markets would be back to what we were a couple of weeks ago, trying to price in higher taxes, right? But in terms of quantitative easing, we would have a much higher interest rate and still recovering interest rate, you know? Like, without another crisis, and the longer that we'd go without another crisis, the more that it's like, hey, you know what the Federal Reserve did after the 2008 crisis was correct. You know? And even with the pandemic, I still kind of look at what happened after the 2008 crisis and have to ask, well, it seems like it worked. I don't know. For that time period, it worked. And is there like a really huge consequence for it later on down the line? Well, I think there is, but I don't know what that consequence actually ends up being, and if it's really the end of the world, you know? Shot in the dark foot is going to start going around that CPI is this cycle's canary in the coal mine, and people will start trending towards gold and stuff. By the way, Bitcoin down at the moment. This most recent candle is down. The gold and silver are still pretty close to unchanged from before the news. There was a big spike up in silver, and now they're coming back. So it is still working it out. And the Japanese yen, well, like the currencies are oscillating big time. So the 6J recovered significantly and is now kind of coming back down. So nice move on the ZF. Well, yeah, I mean, it's on all of them, but the 5-year in particular for sure, yeah. The curve is still flattening. Like I was saying that the 2 and 10 steepened, but the rest of the curve seems to be flattening. Man, the sell pressure in the 5-year in particular is cuckoo. Oh, even in the Treasury, it's cuckoo. Over 100,000 net sell cumulative delta in the 10-year. Like, wowzer. Take a step back. People need to go back to work, but reluctance to use public transportation has driven up demand for used cars, and prices have surged. This won't go on forever. Outside of the COVID-sensitive comments, the numbers are Benyon, says Pantheon Macro. They have a good argument there based off of what we read, right? Because what we read in the stats or in the crosstabs, everything increased, but the food and energy costs were actually not so bad. Food and housing and the numbers that really matter, they were up more than expected. They were like in the spot fours. They weren't crazy, right? Why was the number crazy? The reason, the biggest component for one of the biggest components for the number being crazy was transportation. So my wife really wants to buy a car right now, and I'm like, I don't think that now is a good time to do that. %30 drop from you're trying to make a prediction that is way further than I have the ability to predict. Okay, so on the open, I'm seeing dip buy-in. These are staggering numbers, says Rick Santelli. While the direction was expected, the amplitude was very much a surprise. BLS and Consumer Price Index inflation is real and it's spectacular. Liz Cheney says she will do everything she can to ensure that the former president never again gets anywhere near the Oval Office. Okay. If that's your top priority right now, you probably shouldn't be a senator. Just saying. Or you probably shouldn't be a Republican. Okay, so that move up on the open seemed pretty big, but it's I don't know, it's small potatoes in comparison. It's coming back down a little bit. We'll see. It's going to take them a while to sort this out, aren't they? And they're bouncing around that moving average, so. At the moment, it looks like they're just stopping people out. Fled's Clarida will be prudent, appropriate to gather more evidence before making that judgment. Well, the thing that I'm definitely going to be watching today is like, where does gold and silver go, right? If gold and silver remain unchanged because the interest rates are going to raise, or, you know, it just doesn't pick up, then maybe no big deal. But like, again, where I was saying one of the places where I'm concerned that the inflation may not be transitory is in what I'm going to call reflexivity effects, which is regular people seeing the inflation and making moves based on that exacerbate inflation effects and replace the transitory effects. And I think that probably one of the best proxies for that is going to be, what does silver and gold do? So if silver and gold were to end the day with a meaningful move up, say silver closed above 28, enough for it to start picking up on people's radar, you know, that could have a big impact. Okay, well, the Treasury's backed up quite a bit there, so. Yeah, I mean, I own the silver. But part of that was kind of like the original one was, hey, I think that regular people might pick up on it. It didn't take off. But then it was like, well, we're still going to see inflation later in the year, so I want to hold it and see how it worked. Then I bought more when I saw that it was just oversold. So my larger play here that silver and gold are going to take off because of inflation, yet to be proven. Look at this. It's going to come back to where the scene of the crime was, I guess. The scene of the crime was 41, 32, 30, we'll say. 32. They're awfully close to it. If I get that, I will add. So interestingly enough, yesterday there was some really big limit orders out in the market, and today we're not seeing any of that at all. But the book still is relatively light, so does kind of look to me like some of the issues here are the currencies still not settling through. The GameStop Twitter account tweeted a picture of an astronaut on the moon drinking a beer, saying, "Been away for the past few months. What did I miss?" the GameStop Twitter account. Oh man. Future Trader 71 says that they're expecting responsive buying any
Block sell.
I have to go back and see what the setup he would have for it to come all the way back to the news price, but okay, so interesting action here in this 23 area. So it looked like they were getting a good uptrend and that they were going to come up into that 32 area, but they're building a distribution there. Pretty solid distribution. I think that spot, oh no, my DOM's reset on the open, so that's just where they've been trading here so far. They got stuck on it, huh? It's a pretty significant change in cumulative delta as well. RJ will focus on midterms. This is public infighting. It really is. Like, the whole thing is like, why are you so worried, Liz? It's over with. Why are you still talking about it? I'll tell you my theory. You want to know my theory? Liz Cheney isn't really a Republican. She's not a Republican in that, like, she has deeply held core beliefs about conserving things and yada blah blah yada yada. No, she wants power. She wants political power, and the GOP is the best vehicle for her to do it. And that doesn't mean that she doesn't have principles or anything like that. It's just that because of that setup, where the thing that she's concerned more about is being in office and getting what she wants rather than her conservative principles, she cares more about what Donald Trump might be saying than she does about Republicans winning the midterms, even though what Donald Trump is saying right now is not relevant and doesn't matter to anything. So I think Republicans are absolutely right to take her out of her leadership position. And I'm sure that she's in Montana, right? She's the Montana representative. I don't think that she will be in office for long. Because this is the thing that Republican voters hate, that are the most upset about, is that there's like this circular firing squad instead of going out and winning elections and stopping the liberal horde. Four years after Trump, there are not a lot of Republicans left standing. The ones I knew, the ones who were able to have lunch with each other, pre-Tea Party Republicans. Well, yeah, the incentives, like what the power incentives that are attached to each party has completely flipped from what they were before 2008, for sure. But that was only a matter of time. I mean, like the long and short of it is that what the U.S.'s policy is in Iraq and Afghanistan doesn't really matter to people anymore. Doesn't really matter to people anymore. The argument for the Cheneys is not there, right? And now you get into all of the things that people like the Cheneys believe are not the things that the GOP base believes. And there's a lot of Republicans like that. And some Republicans have kind of seen the writing on the wall and have kind of gone towards Trump just because they saw that, okay, Trump is the only one that's able to actually speak to this interest that the people have, right? But then there's this other group of people that, because they don't understand, they're not looking at it, they don't really understand their voters and what their voters believe and care about right now. And so the only thing they can see is what their highly conscientious personality can see, which is that Donald Trump is a bad person and we need to stop. So that's like the most important thing in their mind, and the voters don't give a fuck. The voters don't care a thing about what Trump is like. They just want the policies. They just want to stop the left from continuing to push them, drag them along, right? Liz Cheney voted on the side of Trump more than her replacement did. Yeah, but Elsie Stefanik doesn't constantly insert herself in order to get quoted by the Washington Post and completely derail Republican messaging. Like, do you see? Like, they don't care who you are. They don't care who you are. All they care about is that when you're in office, that you're going to get more of their team elected, and that once you're in office, that you're going to do what they put you in there to do. That's all that matters. The personality side of the political spectrum in the GOP is dead. This GOP that you remember from the 80s, where you needed to be a God-fearing man and we cared so much about personal integrity and all of that, it's gone. Republicans ran with that for 20, 30 years and got screwed over and over again, and they don't care anymore. Right? That's the thing that Liz Cheney doesn't get. They like Trump because Trump did what he said he was going to do. But that's why this battle in the House Republican Conference matters, right? Because we kind of need to see what the fallout is from it. The fallout for it of it to see what the Republicans' chances are for the House. Probably, I think they probably will take the House, but it's a question of like to what degree, right? What does your political opinions matter to trading or investing in the markets? Icarus, have you watched the markets for the past 2 years? Like, the politics is almost all that matters these days. Like, the government is responsible for 30% of the income in the country right now. How does what's going on in politics not matter? I know you want to be able to come in here and look at this thing and say, it moved up and then it moved down and it moved up to this degree, and that means that it's going to move down to this degree. It doesn't matter. It doesn't matter, dude. The markets price things in based on their relative value to each other, based on their expectations of the future. Guess what? The government has the largest impact on investors' expectations of the future right now. Well, actually, no, I take that back. Probably the Federal Reserve does right now, but we know what the Federal Reserve believes right now. So the biggest unknowns in the markets are what? Is the inflation transitory? Who controls Congress in 2022, right? So yeah, it matters. It matters a lot. And I say, if you cannot listen to another person's opinion because they're a Republican about why the Republican electorate is behaving the way that they are, and why the representatives are behaving the way that they are, and the way that Liz Cheney is behaving the way that she is, and be able to form that into a worldview that gives you some chance of being able to make predictions about the future, or at least be able to see what the risk rewards are to things, you probably shouldn't be trading. Like, if you hate politics, you probably shouldn't be trading. Like, I don't want to be discourage anybody, but if you hate politics, you probably are not going to have the what is the word? The dedication and to the process of trading itself to keep doing it long enough to be successful. Right? People that like trading tend to like politics. This is just the way, like, they talk about politics on CNBC all the time. Well, they didn't get up to the 32 where I had my order up at, but you can't cancel it now because if they come back up there, and my plan probably changes. But and this doesn't need to be there either, by the way. You can play that by ear. Is it 35%, Uzi? 35% of all income comes from the government right now? Yeah, I don't know, man. I wonder, because that comes up every once in a while, but like, I think it's the same stupid person saying that over and over again. I don't like politics, and you've traded for 22 years. Well, I'm sorry to hear that you're still losing money. No, I'm just kidding. Dude, what percentage of the content on CNBC is political? Like, come on. politics and financial markets are inseparably connected. I find it so ridiculous for anybody to come in and say, oh, I should be able to trade and do trading in financial markets without having to think about politics. It's never worked that way. Right? Like if I'm thinking of myself as like a financial news outlet of sorts, right? So CNBC, they cover politics. Who was it before them? The Wall Street Journal covers politics, has an opinion column. I have an opinion. I like to talk about my opinion. But it comes back to the same old argument. If you're taking trades on 1 minute charts, tracking news seems a bit unnecessary. If you are taking trades on news, it seems like tracking a 1 minute chart is unnecessary, don't you think? I mean, I have a 1 minute chart up there. Look at that. Upper right. Do you think that that's useful right there? Do you see the buy and sell? Like, here's the price. I don't know, man. I don't know. Is it useful? I'm not so sure. I look at it. I don't actually completely understand how I use it. If I actually use it, it's there, but I'm looking over here. My eyes are over here on the DOM. I don't know. Hello, Seth. What do you suggest for learning NinjaScript? Okay. A real question. Different subject. Shall we talk about really the thing that I'm actually good at, right? Programming. I wouldn't necessarily say that I'm awesome at creating quantitative strategies. I think what I need to team up with somebody that went to statistics for school. That's what I think I need more of. But what would you suggest for learning NinjaScript? So if you go back and you look at my videos, maybe I need to make a video to kind of explain this a little bit more to people, because I don't think that people understand it. But I have a video about what are the main functions that you need to know. Okay, so this is like, where does what component of the trading strategy go? Like, which methods do you need to know for every strategy that you're going to do, right? And then the second part is data structures, which is kind of more of a general CS topic. But kind of what I did was I explained the CS topic to you, and then I show you how you implement them within a NinjaTrader trading strategy together. Okay, so that's key part number 2. Okay, once you understand those two things, you have the tools to make anything that you want. You do that, and you look at the NinjaTrader documentation when you need to understand a function. And the way that you get started is you just look at other indicators and see what they did, right? And that's it. And then it's just a matter of doing it and doing it and doing it and doing it. And, small progress here and there until you get something that, you can really glean some real information out of. There you go. And I have the odds of testing depending on market open. I am planning on making a custom indicator that plots my database and stats on Ninja. Sure. So you are you saying you want to export the data from NinjaTrader into some sort of a database or other data processing thing that allows you to do some sort of analysis that you find difficult to do within straight code? Then that's great. If you want something that you can do is you can just say on bar close, export the data. I do that in some of my indicators and stuff. So like that's how I export level 2. That's how I save historical level 2 data. I want a tool that plots my stats on Ninja. Well, what are you plotting? What kind of a plot is it that you're doing in Excel? Okay, well, the Bulls have had multiple attempts higher. We'll see if the Bears take over here. Certainly, a dip below the open could tilt things very much in favor of the Bears. Now here's an interesting thing. This person is saying, Liz just needs to keep her mouth shut. And then they're saying that's fine as long as the GOP holds Trump to the same standard. Well, what is it that Trump is saying that is so damaging to their midterm strategy? Is it talking about the stolen election? Maybe then that's true. I'm not sure if talking about saying that there was voter fraud and that our election systems could be more secure, if that hurts the possibilities on the midterms or not. I would need to look at polling on that. I'm still waiting for him to say what kind of a plot he was doing in Excel, but floods Clarida. Clarida, the level of uncertainty around inflation is unusually high. There you go. Can't argue with you on that one. Carl Quintilla retweeting Dave Weigel, who was responding to Jeff Stein. Larry Kudlow on April jobs. I thought the numbers were a complete fluke. All the seasonal adjustments the government's uses were thrown out of whack. Actually, jobs increased by more than 1 million. You're going to see a big number next month. That was Larry. And then David Weigel responded, Biden's doomed. I don't get that one. If the next number is going to be really good, that's good for Biden, isn't it? Hungary to slash the tax on crypto earnings by 50% in hopes that of encouraging people to disclose trading profits. Well, there you go. Good luck with that. Okay, so there is the push to sell. And we're below all of the previous lows here, some except for the big low. So they're definitely going to try now at this point to make the push to below 4,100. For example, today, contacts I have odds of breaking at least one side of the previous range. At least one side is broke during 70% of the time. No breakout, 21% of the time. Okay, so if you go into the downloads channel of the Discord, I have a stat suite posted in there somewhere. And in that suite, I have an indicator that will plot probabilities of that nature. Like it will do an outright plot. Does that make sense? So you can load like a daily chart of the last, or you can add a 30-minute chart of like the last year, and then it will tell you stats like that. It'll tell you like what is the percentage chance of it breaking the overnight high or overnight low. And or you were saying the previous range, previous days higher, previous days low. Okay. And it will plot that out. So as that percentage changes, it will show you how it changed. And that plots an NinjaTrader. And I found that, for me, that's the best way to plot a stat like that. Okay. Now, be careful with those. So the issue with that one is that you can certainly find certain probabilities of certain things happening that have pretty high outlays. Like the probability of breaking the overnight high, overnight low is really high. The probability of breaking the previous day's high and low is really high. The issue, though, is that that stat alone does not a trade make, right? You still have to be able to have a specific entry point and hold a specific amount of risk and reach a specific target a certain percentage of the time in order for you to actually have a real trade, right? And that one piece of information, there's so much else going around that even though you might have something that happens 70% of the time, when you actually try and trade it, it ends up being a break-even sort of a thing. I only use my stats as my context reads. Oh, sure. I'm just kind of... lumber is limit down today? What? Okay. Curious. So some buyers did step in there. I guess I can kind of see why they might have stepped in where they did. There is like a step in the profile there. But I think that it was really like a really strong buy came in below 4108. And that might have been a short-term thing, yeah. So can you see that there on my screen? Where, I could try and zoom in on it a little bit. We had a pretty aggressive down move right there. And then that caused them to buy it up. So I think that probably what happened was an algorithm saw that as an opportunity. So then everybody tries buying off of it. But the whole issue is that like above that, right? Above that, there's no edge to it anymore. And even now, they might have taken their profits up there. So they're all trying to read some autocorrelation that probably doesn't help you. That's my justification for ignoring that. I don't know. We'll see. It seems to me that on the lumber trade that it's just the volatility is becoming so high that it exceeds the circuit breakers now. Okay. Well, man. Buyers trying again, huh? Well. Oh, there was a little slip. So that's what that was about. And Governor Bailey, the terms of repayment should be in line with assets' inherent liquidity. No, that can't be it. It's been about 4 minutes now. Maybe there was something Governor Bailey said that they're responding to. I'm not sure. I didn't hear anything coming from this news squawk or anything like that when it happened. So. Lowe's reported they beat earnings, but if you can't get the lumber, the sales slow. Well, there is so the thing with lumber, the question is, where is it coming from, right? Is it just increased demand, or are there so a lot of people allege that the lumber yards are holding back and not putting their supply out into the market? If that's the case, then there becomes a point where the incentive for them to break and start selling is just too high. But they're fighting hard to stop the pivot from happening, seems. Fed officials have cracked open the door to a climb down on their dovish stance. Oh man. Donald Trump made a post about Liz Cheney now. Liz Cheney is a bitter, horrible human being. I watched her yesterday and realized how bad she is for the Republican Party. She has no personality or anything good having to do with politics or our country. She is a talking point for Democrats, whether that means the border, the gas lines, inflations, or destroying our economy. She is a warmonger whose family stupidly pushed us into the never-ending Middle East disaster, draining our wealth and depleting our great military, the worst decision in our country's history. I look forward to soon watching her as a paid contributor on CNN or MSDNC. Yeah. That's funny that he used MSDNC. That's exactly what's going to happen, y'all know. It's probably going to be CNN. It's 100% going to be CNN, right? All a pundit from Hot Air is not happy about Liz Cheney being taken out, but he's another one. Like, I kind of wonder sometimes, like, why are you in the Republican Party, all a pundit? You don't seem like a Republican to me. You're only a Republican because of the Iraq War. I'd rather you not be a Republican. The market year says quant trigger 4078. Oh, really? Well, that's still pretty far away. I think we should come in and look at some of our VIX targets now. Downside target would be 4085. Well, I've seen good little pushes both ways, but for the moment, it seems like that the buyers have a slight advantage. Nah, Nemezian short's not a live trade. There's no way that I would be able to take a live trade like that during action of that kind. So, unfortunately, see, the big conundrum for me is that some of the places where I think that I have the most edge are places where it's really hard to hold risk, you know? You basically, for me, for my small account, the risk of ruin is too high. But when you're on a sim account, there's no risk of ruin, so it's fine. Do you have an indicator that calculates the average bar range over an X number of candles? You're just talking about ATR. So you're undercapitalized just like me. I would say yeah. I feel like for what I want to do, I'm undercapitalized. Like for what I would like to do, I think that should be trading like a $10,000 account. And I don't have a $10,000 account, no. So kind of the thing is then you want to move over to something that's more consistent and smaller risk, right? But finding that's super hard. And I got a couple of things that kind of suggest I can do it, but I think that they still need refinement. They need a lot of refinement. Like in particular, like so I got this one trade that I think is really great for like if you want to just take on risk and have a high win rate, like HFT kind of a strategy. And I even have some ways for managing the fat tail days. But first of all, you have to be fast. But second of all, I think that I need to work out a more sophisticated model about when to take it and when not to. Essentially, I need to learn more about Markov models to create some sort of and I need to do more in terms of collecting level 2 data to analyze to utilize that better as a filter. Okay, well, when I said that it seems like the buyers have a slight advantage, like almost as soon as I said that, they flipped back down, so. Yeah, so there it is again. When they get down in there, there's somebody buying with big lots. How much is it? I would say they're trading with like 500 lots. I think you are on the right track. Most retail traders are not making models off of level 2 data. Yeah. But I tried a naive approach to the level 2 data, and it made a little bit of a difference, but it wasn't enough. Like, the issue with it was that some days it will be right every time, and sometimes it will be wrong every time. So there's more to when you should be using it and not, right? Like the level 2, the imbalance in the level 2 can be a really good indication, but it's more simple than just, go which side is long or short. You have to split it down into what kind of a day it is to know which side you can take it. And sorting that sort of a thing out through observation on my side is, I don't think you can do it. Think that you need to do some sort of a more statistical look. The level 2 data works some of the time. Yeah, like here's the when I've the research that I've been doing lately, because I've kind of been reading about quants a bit more. A lot of the quant trading that I read about is much more portfolio related, right? It's way more about like you buy these stocks that are doing this and these stocks that are doing this in order to take advantage of some sort of larger inefficiency in the way that the market is people's holdings, right? That's a lot of quant strategies, right? Like a lot of hedge funds, rather. And then there's the Citadels of the world. So Citadels are more high frequency trading. And it sounds to me, from the information that I've read, that Citadel has a lot more to do with options than anything else, right? Which I don't necessarily want to get into options. I just don't feel like, I've looked into the data and everything. It's too hard for me to get the data to be competitive with that. Okay. I still want to stick to futures and commodities and still have some discretionary input, because I think that there's some real fatal flaws with some of these statistical models that people use too, right? So I don't want to take the human element completely out. But that's what makes me so interested in Jim Simmons, because they started out on commodities, really. They started out on commodities, and they had a hard time getting their edges to work in stocks. Like, it took them a long time to get that to work, but then when they finally did, that's when, like, they really started making big amounts of money. And, like, everything that I hear about their setups kind of sounds like that's kind of more the way that you want to go. I don't think that they're intraday, per se. So that's a problem. Because, again, that, to do what they were doing intraday, you probably need, like, a $10,000 account, right? So then I kind of go back into like intraday signals. And the only empirical research that I've seen on signals of that nature tend to be related to pair trading. Banking on a mean reversion in certain pairs. And those can be intraday, but they can be like it takes a day for it to revert on some of them, right? So there's that kind of setup. So when I see retail traders come over here and say, okay, like, we touched X level and like this Fibonacci and things like that in particular is where I'm like, I've not seen any data to support that anything like that is even remotely effective. My own experience and my own testing says that it doesn't work at all, and that a lot of the rules of thumb that retail traders talk about the most are flat out wrong. So yeah, so like level 2, it's a great example. It's like, okay, like the rules of thumb that people tend to give you about level 2 imbalance in particular are not true. They don't. Like, you can't, and Peter Davies has even said as much, that, if you come in here and you do the, like this one, I don't really show this one very often, but like this, imbalance, level 2 imbalance histogram, or the stacking and pulling histogram, and you try and take your trades off of that, it doesn't work. Like, it flat out, it doesn't work. So could you develop a Markov model around that and find a more reliable setup of that nature? It's possible. That's beyond my current understanding, although it's things that I'm researching and I'm starting to understand. Right? Treasury bonds went to hell today. Well, they're recovering okay at the moment, actually, but I don't know. The market is actually, I mean, the initial reaction was like, oh yeah, of course, they're going to sell it as much as they can there. And then it reverted because the book just couldn't handle it. But now that the market is open, I'm kind of looking at it, and I'm actually surprised at how well they're handling it. The equities in particular. Like, perhaps the case is that this beat in the CPI, that's why they've been selling the past 2 days, and that was basically already priced in. That's kind of what it's suggesting to me right now, right? The Treasury, though, like the 10-year in particular, is going to have some issues because they've got an auction today, right? And yeah. You just invested in 3 different cybersecurity. Oh, really? So I looked into that, wine tube. I'll just tell you my own research on that and where I'm at. I'm not giving up on the trade yet, but what I'm going to tell you and just warning you is probably not going to be what you want to hear. So when I started looking at that and I started talking to some of my cybersecurity friends and things like that, a lot of them were saying, well, this is long overdue and it's good that we have an event to get people to wake up because our infrastructure is really vulnerable, sort of a thing. So then I'm like, okay, so is this going to change where the investments are being made? And is the government going to change its strategy a little bit? And the answer was basically like, no. So from what I can tell, this is a net negative for the cybersecurity industry to some extent, because there may be some more investment that come in from individual companies. It doesn't look like the government is going to start throwing money at it. But the issue is that what it really ends up being is more stringent requirements on everybody, more technical debt, more scrutiny on the cybersecurity firms and the services that they offer. So my take on it at the moment, and I'm still researching, but my take on it at the moment is that this will have increased costs for cybersecurity firms. And their gut reaction to the hack has been down. So there's that to factor in too. Maybe they revert back up and it's fine. But I believe that that's why it's sold, is because it's going to increase their costs. So that was what I ended up with my research on that. There was another thing. What was the other thing that we was looking at yesterday? I think it just had to do with what Trump and Biden had done. The complaints with Trump and Biden were just like there was a cybersecurity expert that they canned. It just looks to me like the government hasn't really done a whole lot with it, and that they're probably not going to do a whole lot with it because they can't. I don't know. Lumber is back up again. It's just oscillating a lot. The way that this is traded today, although more recently since the open, it's been a little bit more difficult, but you're getting a pretty solid rotations oscillation in the market. And based on the things that I tend to look at for that sort of a thing, kind of suggests now is the optimal time to go short. But we'll see. So probably shorts are gonna pile in here a little bit, and we'll see if they pressure it again or not. By the way, how much? Okay, so the 5-year saw some pretty extreme cumulative delta on the way back up, but not in the 10-year. think that I need, hold on a second. I'm not seeing the 10 and the 5 part of the spread. I don't know why I don't have that up, but what is the current ratio on the 5 and 10? It's 3-2. Let's add it. Huh. That 5 in the 10-year spread hasn't changed a whole lot, actually. It's really the knob is the one that moved the most, and it flattened considerably. So reverted maybe half of that move, but it's still overall flatter. So that doesn't necessarily help me explain what's going on in the 5-year. Other than maybe flattening. Like maybe the trade is more spread between the 30 and 5 rather than the 30 and 10. And we're just only seeing it in the 30 and the 10. Because that's all I'm looking at. Believe it's going to go up in short term if the market doesn't crash right now. I believe the more and more people thinking like I do start pumping money into these cybersecurity end up going up. I don't know. All I know is that for the individual businesses, it's not necessarily a bullish thing. I'm only going to take a trade on that if I know something about, certain cybersecurity firm that I think gives them an advantage over everybody else, And when I started looking into that, I didn't see that. I started to see like, oh, this kind of makes it harder for everyone, really. Now, if the government comes in and there's some legislation and some presidential orders on the issue, that might be a different thing. Oh, okay. Zero Hedge saying that Ethereum reaching an all-time high. Oh, how come it's... Oh, there it is. Okay, well, Bitcoin recovered some of its losses. Probably I need to add Ethereum on here. Can I get it to show up? Let's see here. ETH. Ether futures. And have these be 30-minute candles. $30 and $90. Will it load? Okay, so now they pushed new lows. That responsive buyer didn't come in that time. So, oh man, they like sliced right through them. That last 5-minute bar, wow. Oh, hey, it did work. Okay. Make sure that those are all one, so it looks pretty. Good deal. Okay. They give us a little bit better view of the cryptocurrencies because we can see definitely the speculation is going into Ethereum right now, right? So I'm going to try managing this a little bit. You kind of see they're running away from me though. Okay. just because it's been kind of tight so far, and this is still kind of the point at which it's like, okay, so this is kind of more the buy location, since it's definitely oscillating at the moment. 200 on a trade is great anyways. What's happening with the bonds? So what do you mean? So all I can say is, one, obviously a really hot CPI is bad for bonds, and so they sold pretty hard on it. But a compounding factor in the 10-year treasury in particular is that there's an auction today. And I think that there's going to be a lot of concern about there being demand for the auction, given that market participants are starting to bet on the rise in inflation. And so that 10-year is likely to tail. So until we get the, at 1 o'clock Eastern time, until we get the 10-year note, I think you're likely to see selling. And the general empirical pattern that you will see around auctions in treasuries is that they will sell going into the auctions and then buy afterwards. Basically, the market coming down to absorb the supply, and then okay, so it took some profits, but it's continuing through, so I'm glad that I didn't take it all off, right? Yeah, they look like they're headed for that low, man. So can I come in here, market 40.95 and a quarter? 40.95 and a quarter. OV low. Okay. Took larger size than normal on demo to short all side. You guys played out well for you, Vlad, because you're all short. This you got to be. I would hope. Listen, Vlad, not to poke. I'm not trying to poke at you, but if you were not doing well today, I would start to be like, this guy, because this is your thing, right? So good for you. You knew when it was in your favor, and you added more risk. That's great, I think. As long as the key problem here is, we talk about this. I mean, we've kind of been dancing around it for a couple of days, but I never really got to the thing like, if Nicholas Nassim Taleb was here, this is the thing that he would want you to know that I haven't been talking about. So if you get a distribution like this, okay, and this is the fat-tailed distribution versus the regular distribution is kind of more like this, right? Okay. What he's saying is that basically you've got to be careful about these fat-tailed distributions, that all of these guys, they come in and they say, oh yeah, I want to take this trade because it's in here so often. But in reality, there's these fat tails, and you don't know how to deal with these fat tails, right? So instead, you want to go with something that is not so fat tails, essentially. This is essentially what he's saying. So he's saying that having a strategy that kind of performs like this is better than having a strategy that kind of performs like this. Right? Is this a dick for no? Anyways, right? That from everything that I've watched from him on YouTube and everything, that's what he seems to be trying to say. Is that it's actually to your advantage to accept a little bit more variation in your performance, because then you don't have to deal with the fat tails, which are really problematic, right? And then to that point, when you're accepting that variation, right, you just got to be careful that the variation is not that this right here is not larger than your account size, right? This is so the issue that I think that many retail traders have is, we've talked about this before. Everybody says it, right? You're not adequately capitalized enough, so you can't trade this strategy because with the amount of money that you have, your risk of ruin is too high and basically becomes 100% because you need like 10 times more money than you have. Is what it comes down to. So how do you come up with a strategy that still has that kind of variation to it, but where these drawdowns are only like $500 is what I would like to see, right? That's the sort of the strategy that I've kind of been looking for. And whenever I go in and I do the analysis and I find strategies that seem to work, they don't fit those properties, right? So now the thing that I would be afraid of with you is that what it seems like your strategy tends to do is this. It goes down, and then a big win. Down and down and down for a really long time. Big win. You know what I mean? So you gotta be careful. That's I mean, I guess it could work. But oh man, that was super tough mentally and emotionally to trade, right? Oh boy. Colonial Pipeline seeks a cybersecurity manager to oversee the development of standards and processes for cybersecurity and lead the recovery from security incidents. Oh, good. It's good to hire a security person now. Well, there's always a worse strategy. Imagine it going then without the big win. Yeah, exactly. Well, like the problem with the problem with my trading, like when it comes to, because I do news, right? That's my main. You gotta understand, my main edge is news. There's a lot of things that I say about the news that I don't say until after the fact. I don't know. I kind of try and leave it so that you guys like Kevin and Vlad that are here literally every day, that you will know where I'm kind of holding back on you and where I'm not, whereas a new person won't, so that we don't dilute the edge, you know? But I digress. What happens with me is that it should be, well, lately since the pandemic, it's kind of been like this, and then I can get one like this, right? But kind of what happens, so what you want is you can have like this and you get like this. So then if you have a little bit of a drawdown, you're fine. And then whatever. But what will happen to me is I'll come in. Maybe I get this. Okay. There's a bit of a drawdown. It comes up. And then there's another one. And if I do the right thing, if I understood it correctly and I made the right decisions and everything, then I should get this again. But I'll screw it up and I'll do this. And then, you know, that's what I've done in the past, right? You always toss a coin before the news, which decides if you go short or long. Case closed. No. You know, I have wondered though, maybe we should do this. I think we should do this. I think I should make another account called Speculation. And I should take a trade before the news every time and see, because I think that I may have a knack for knowing whether what the number is actually going to be based off of, you know, whether they're going to be above or below the expectation. There's been a couple of times where I've come in and I've been like, yeah, I knew that was going to happen. But I haven't actually tracked it, so that might just be a delusion, you know? Watch this account and have 100% win. No, I bet you that it's going to be way worse than I think. I bet you, like, I'm watching it and I think that, like, hey, you know, I bet you I'm probably right 60% of the time on these news moves. And I bet you I'm going to go through it and it's going to turn out that I'm actually right like 30%. That, I mean, based on the way the stats and what I know, that's what I would tend to be. But I think I'm 60%, but I'm not a reliable observer in that kind of a situation. I know that I'm going to be wrong about it. So I used to do, like, when I worked for Goldman and I couldn't really trade, I would just, you know, use my trading view charts and track trades in a spreadsheet. And I would win 55% of the time. There were even some situations where I was right 60% of the time. And I was kind of doing like a similar sort of a thing. I was basically taking swing trades based on sentiment and news. And back then I would take like a 4-tick stop and try and let them run. Like if I could let them run for all week, I would do it. And yeah, so it was like, not only did you get high win rate, but you got big runners. But then it was like, okay, but would it have actually stopped out and ran the way that I'm telling it to? And I don't think it probably would, but so I always discounted those stats, because once I started trading, I said, nah, like what I did on this spreadsheet, it's not even close to what I'm doing now. That what I did on the spreadsheet wasn't realistic, but it sure looked nice at the time. I had a nice spreadsheet. Was pretty proud of it. Oh, what about the Einstein quotes?
Winston's mom says, I believe in intuitions and inspirations. I sometimes feel that I am right. I do not know that I am. Albert Einstein.
Yeah. No, it's totally a thing because like there is definitely something to discretionary trading. Like make no doubt, as much as I talk about using empirical evidence for your trading, I have another belief that is seemingly contradictory, and that is that these robots and these statistical models have significant flaws. Okay, there was a stop there. I'm going to take mine off because I got to get going anyways. And I'm going to leave the treasure one on until 11. But because I've got to be leaving in 15 minutes, hearing that noise at this time means I should get out. It's awfully close to the overnight low, though. I wouldn't be surprised if they go for it. We're just going to have to watch the order flow and see what it does. But I think for me, that was a good take it off now. It's good. 250. Probably it could have been 300 if I had held all the contracts, but whatever. It's fine. Anyways, well, it was when saying pattern recognition intuition is a perceiving function, just like using our 5 senses or using memory or how things were done. Well, so that's the thing is I do believe that there is something to intuition, and that some traders seem to have something that to their intuition where they're able to make calls and they can be very good at it. I don't think it's pattern recognition. Just because every time that I try and game out something like that and test it to see if it really exists, the probability is not there. You get what I mean? You go through, you don't find something that happens more often than it doesn't. Like the properties of the randomness of the market still ends up trumping it. And you end up with a 45% win rate with an equal risk reward because of the spread, right? Like that noise in the market is just so strong, right? So I don't think that the intuition is in pattern recognition. I think that the intuition is in risk management. The intuition is in like if we go back to Ace. I haven't talked about Ace for a while, but the Ace's signal, I tested it. It was basically random. The reason that Ace was good was that he was able to cut off the ones that weren't working and let the ones that were working run really, really far. And it was from the runs that basically he derived all of his profits. And how did he do that? He couldn't explain it. You get what I mean? So I think that if there's a place where some traders seem to have some intuition and where it can work is on the risk management side. I bet you that there is probably some mathematical model that could really explain to us a better way to manage risk, a better way to say, okay, this trade is running. Here's where you should take your profits, or here's where you should take your losses, that we haven't discovered or that we're just not aware of as retail traders, I can explain it. He was using filters maybe he didn't even realize. Yeah, I don't know. Because it seemed he kind of thought that he just traded the line and that it was all pretty straight. But you can't program what he did. You can't. I couldn't. I never had him come over and go. I would still like to have him come over and look at the code, and we go through and try and change some things to get it better. But the thing is, people are suspicious by nature, Yeah, there's things that people can do that to manage risk. I think the problem is that it's not something that just comes naturally to everybody. Like there's something to do with the intuition of it, but I think that it also comes down to certain knowledge and beliefs about the world that you have to develop too. Anyways, so he traded for so long he had an eye for what was going on in background on larger time frames to drive runners. Yeah. So I certainly think that I have developed some degree of intuition to where when the markets are making big moves, I'm getting better and better at being on the right side. And I'm getting better and better at knowing when it's doing something that it shouldn't and that it's okay to fade it versus not. Like I haven't had a day in a long time where I just kept going against the flow to my ultimate ruin. And then that might be more of a mental nervousness sort of a thing. But, in this market, when I've gone against it, it's gone against me really far, but it's worked out in the end, right? But there's still those kind of problems of like when it's not really going anywhere, taking too much risk and screwing up there. Yeah. I don't know if that's what it was or not when. Can't say. I might have just been too harsh for him and that was lost strong. Yeah, it's okay. I know I'm an asshole. Okay, so that was a break of the lows. RJ Will says that he has feelings for her. Yeah, I find that so unfortunate because my intention was, at least in that particular thing, was to protect him. I was concerned that he was saying something that could hurt him and wasn't saying like, don't share what you've got or anything. I was just saying you can't say it like that because if you really take that to its complete development, you're doing something that people can sue you for, because people can claim that you induced them to trade. That's where I was like, you could be careful with that, man. And he made that joke before, and I felt like I didn't properly address it. So that was the only reason why I was doing it right there. Before that, there was some other arguments that I think should have hurt his feelings, and he seemed like he was okay with it, and so I thought I could play with him like that, but I really shouldn't have. But the thing that was weird, though, I don't think it's that. It's more of a. So I always come back to like the what do you say? The attachment thing. You notice that he's kind of been a little bit elusive. It seems like he'll leave without really saying what he's thinking. It's been hard, even before the pandemic, it's been hard to nail him down to actually meet in person. Like he doesn't have the same kind of attachment style as I do. I'm like incredibly nervous about it. I'm like, if something's going on with somebody, I'm going to make every effort to make sure they understand what I'm thinking, you know? And I'm going to avoid any kind of vagueness whatsoever, right? So those two kinds of things don't mix very well. And usually I feel like the me side of it is the one that takes it on the nose, you know? But maybe that's not what happened in this case. Because the other thing that the anxious person will do is if there's not any tension, they'll introduce it. Unconsciously introduce tension, which is something that I do that I shouldn't do, but it's like you don't even think about it until afterwards, right? So I'm trying to, I don't know, like in terms of like how I run the stream and the kinds of videos that I make and things like that, I am trying to change some things, right? Like I don't talk about my edges as much. I think that I've found some things in the past that I said too much about. So that's one thing. I'm trying to do better to sell to people what the value of watching the channel is. Was a big part of the video that I released on Monday, right? But there's kind of still this open question in my mind about how do you balance those things? How do you help people but also not ruin your edge? How do you sell people but also still be or you know, sell people with a business relationship but also still have like a close knit community and a secure relationship with the people in the community? You know what I mean? Don't overcomplicate things, keep it natural. I wish I could say that I believe that, Pyrrhic, but I know there are inefficiencies in my own behavior that have to be factored in sometimes. It just is, you know? A little tension is okay. Yeah, it's true too. You had a baby, pandemic closed down the world, you would have a wife, children and wife who lost her job, then got it back, anxiety. It's okay. Yeah. I don't really feel like, you know, it's a weird thing is that I don't get anxious about things. Like when I think anxiety, I think, oh, X thing is going to happen and I'm really worried about it. And my mind is constantly ruminating over that thing over and over and over again. Right? That to me is like anxiety, right? What will happen to me is I'll get kind of the chemical feeling, the bodily response that you get in those kinds of situations when you're thinking about those sorts of things without any associated thoughts, right? It's like the hormones want to go down that path, but the logical side of the brain refuses to do it. Well, that's also true. You don't have to be perfect to be like, yeah. Well, that's another thing. With the trading, man, I always think like these are the things that I want to stress to people. You know, these are the things that I think are going to be helpful, you know? But if we're going to go into the emotional, psychological side of it, this would be the thing. And I haven't really focused on a whole lot, but this would be the thing. Retail traders are too hard on themselves. We think that there's this goal. You need to be a profitable trader. And this is what a profitable trader is. Profitable trader never loses. Or you know, a profitable trader is profitable every year. And the reality is that our control, you have no control over the market. You really don't. And there is so much randomness to it, man, that the returns are going to be inconsistent sometimes. Like we were saying, if your returns if you're too consistently profitable, I would actually be a little bit scared about that. Because that means that you're going to be really vulnerable to a fat tail, right? You're going to be so hard on yourself. That's why I always get into this thing where it's like, I don't like the term profitable trader. You're never going to hear me use that term. I'm okay saying I've had a hard time with this market and I've done well in this market, because I know that that's the way that it goes. And I feel like that if you've been trading long enough, that you start to learn that the bill that we are sold when we are starting out, and honestly, I blame the combines for this a lot, by the way. I think that the performance goals that the combines drive people towards is harmful, right? Okay, well, the market's really responded off of that move. But we're still slipping, so, I don't want to be involved. Even if I had more time, I don't think I would want to be involved anymore at this point. For me, maybe you have a higher risk tolerance than myself, but for me, when I start getting slippage, when I start seeing slippage in the market, I get nervous. It means market makers are pulling because they believe that they're seeing informed trading. Okay, yeah, time for me to close up. Is the logical side of your brain ready to close up today? No, it's not. You know what? Because part of the thing is I haven't had Meister Terror for 2 days, and so I'm probably being a little more emotional than I should be, So, anyways, I'm not myself today. I think first thing I'm going to do after morning meeting is go and pick up that prescription, so because I'm starting to feel like really icky. Like in the morning I was cold, and because you don't have the adrenaline going, it's like it's really cold. I was like just shivering and shaking. It was bad. Don't be a jerk. There you go. You know what, Icarus? I suspect that is Celine, but like I don't give a fuck what you think, because you're just a troll and everything that you say is stupid and ridiculous to me. And I'm being a jerk, but you know what? I have no problem being a jerk to you because I don't give a fuck what you think. I'll leave you guys with that. In the meantime, stay profitable, friends.